Welcome, guys, to the second part of institutional zones here on the Tradecademy YouTube channel. Today, we have two topics. We're going to talk about which zones are valid, and we're going to talk about mitigation. You may wonder what is mitigation because most of your YouTube fake gurus won't even explain what mitigation is. But here at Tradecademy, we like to give you some extra insight on like every single course basically because not a lot of people talk about this, and I will talk about it because we want to see everyone succeed, and not only our students but also our free YouTube enjoyers, because we treat everyone here as a friend and family. That's why you should definitely check out Discord. We're growing rapidly. We're closing in at 2,600 members. We're gonna do a giveaway soon, and yeah, that's it. So let's hop in the video. So I drew out two things here. So here you can see market structure is bullish, and normally you want your zone here as usual. But you can see I drew a zone with a red cross. What does that mean? It means that that is a invalid zone, because some students or some people in general tend to draw out their zones completely wrong, which is why they lose a lot of trades. And I don't like losing. You don't like losing. I want to see everyone succeed. So I'm going to talk about it today. On the second picture, you can see a zone that's already been mitigated. And the moment price retraces, comes back in your quote unquote mitigated zone, you lose your trade and you lose your money. You gamble, you revenge trade, you blow up your account, and you're gonna whine like a little bitch. So, I'm gonna help you guys to make some money today. Let's do it. Right off the bat, I'm gonna talk about your fake zones. So, what did I drew here? I kind of drew a zone mid-range. For the people that don't know what mid-range is, it's in the middle of the range. I'm not going to explain that because we'll do that later in the series. So, as you know, I'm going to draw it out once again. I've drawn this out like 4 million times by now. We have market structure. We are going bullish. You got your break of structure. In the last video, as you know, I drew out a zone. When is a zone valid? In a bullish example, if our low pushes up and breaks a previous high, so let's say this was structure beforehand, this low creates a strong upward push, breaks this high, what does it do? It leaves the buys here from the bank. So the banks entered here, which the banks need to come back to get it break even, like I explained 400 times already. So I'm not going to go into that again, right? So market returns, taps in the buy orders of the bank, banks close and break even, and buy again and shoot up. That's how the banks make money. So what did I drew? I have a perfect example right here already. As you can see, we have a strong move here, right? This mega high caused this low to take out this low, right? We can all agree. What does that mean? The banks started major selling here. So you already know we're going to get a reaction off of that. And I can already tell, combined with CDL, our VIP strategy, you would have had an entry here and you would have had a nice little trade, an easy 3RR. But we're not going to talk about trades today. We're going to talk about our zones. So this works fine. This is not even a pretty zone like the example I got right here, but it's just to show you guys in the bigger picture. Right here, we have another quote unquote zone. But as you can see, market totally disrespected this zone. Why is that? Because our major structure starts here, right? Higher time frame structure is this. This is a high, a low, and a new high. So why do we ignore this type of zone? Because this is all internal structure. And you guys know what internal structure is because I did a pretty long video over that. But as you can see, market is making highs and lows on the lower time frame. So this is like a lower time frame thingy. But the thing is, banks don't use lower time frames like you do, which means banks only push down here like really fucking hard. Yeah, they push down here as well, but this is where the money is, and you want to go where the money is. So what do the banks do? They just cause this whole down move to exist, and then slowly bring it up, like happened here. And when it's time to come around your zone, which you marked out, we just straight up ignore it and shoot through. Why is that? Because once again, this low high, excuse me, this high caused the market to break this low or this low, whichever one you want to mark out. So you know there's power behind this move, right? This high didn't do shit because once again, the power is from this area. So this is where the banks stepped in. So the banks need to come back to their entry point to be break even, right? So we get break even, the banks get break even, they fall a bit and they continue go bullish because there's a lot of liquidity here. So what is the deal with this one then? Once again, since there's not a big push here, banks are not eager to make market react to it because they just, even if they push from here, they just close all of their entries because the big money is here. And that's why the banks straight up ignore your stupid fucking zone. Once again, here, this low, right, caused this major push to take out this high. So where is the bank's power? The bank's power is at this institutional zone, this area. It's always the major highs and lows, the major up move, the major down move, right? Right here, you can see that we just had a mini pullback. This is just internal range structure. Banks don't give a fuck about internal range structure, right? So if you mark out this, you're gonna get taken out. Why? Because it's internal range structure. There is no big money here. No big money players are behind this move. Maybe some cocky dickhead with like 5 million on his account bought here, like full ported this shit. Sure. But the banks, the big money, the billions are right here. Because you can see what a beautiful push we had. This is just a tiny pullback because market moves in pullback, because if market didn't, once again it would be one straight line up and one straight line down, and we cannot have that because then we cannot make money. Well, we can, but you'll never know what happened, what will happen. More importantly, you don't know how to react to it because we don't predict, we react, and that's how we make the monies, right? So I recently had a call with one of my students, and he had the same problem. He was like, yo, my zones are not being respected. I was like, okay, show me your zones. And he's showing me these type of zones, right? But the moment we go to higher time frame, that zone completely disappears, right? And that's the problem. We don't want that. We need the correct zones. And this is hour. I use 15 minutes, but on the hour it was just clear. This is your zone at the low. Which low caused the high, the break in a bullish momentum? Bearish momentum, it's which high caused the low, the break. So keep that in mind, guys. Always look at where is the power coming from, right? Because let's say you have a lamp, the power is coming from the outlet. So if the lamp's not working, it's the outlet's problem. So you always got to focus on the cause of the problem. Why is your zones not working? Because your cause is not the right place. Your cause is at the bottom, not mid range, because that's shit, right? Okay, that is it for which zones are correct. I can't say more about it because it's just really clear. Go to the 15 when you're bored. Instead of jerking off, go to the 15-minute, mark out your correct zones. It's even more clear here. We have a beautiful low and a beautiful push, and we take out this high, right? What does that mean? Market is going bullish. Besides that, this is just pure internal range liquidity instead of a zone, because you can see we don't get a single reaction of it. By the way, now I'm checking this VIP. If any VIP students checking, we have a beautiful entry right here, which would be an easy 10 RR. And if you have big balls, that would have been a 22 RR. If you have bigger balls, you would have waited for a 30 RR. But that's it for the institutional zones where the place is, because it's not that hard. Right? Here, again, we have a strong push. This is your zone. Would I take this zone? No, because I like my zones at a proper low. This is really high range. You got this, right? Now we kind of resetting. Let's say you hop on the market and it's this. Then yeah, this is your last move, right? This even didn't respect it because it's liquidity. So be careful with it by placing your zones high range, because 15 minutes were really high in the range. So we actually want to look for some type of sell, which can happen from this zone, right? Because this high caused this major move. So where's the money? Right here. And the money's in my bank account, but that's besides the point. So part 2 of the video is mitigation, and I have a beautiful sorry guys, I'm a trader, I'm not good at spelling or English. Example. I have a beautiful example right here. As you can see, we have a zone, right? Okay, beautiful zone. Let me just mark it out like this so the mitigation point is clear. Beautiful zone, right? And let's say Max entered here. So Max's entry is here. Shout out to Max, by the way, VIP student. And, you know, Max took his entry, Max took its profits. But then we have another dickhead student that's from, let's say, some other mentor. It's like, oh, damn, we're in the zone, right? He don't know Max. He don't know Max enter there because Max VIP. We only have good students. We don't have dickhead students from different courts, you know? We don't want that. Stay to your shitty ass mentor. But Max took an entry and Diddy didn't. You know? Fuck Diddy. Diddy bought a course for 4K somewhere in dickhead in Dubai. Whatever. Right? Diddy sees the market but realizes he is too late. What does Diddy do? Diddy places an entry right here. It's too bad market is closed. But the point is, you never want to use the same zone twice. As you can see right here, this is mitigation. Market already came back into the zone. What happens is banks close their orders here. Fucking hell. Here. Banks don't close their order twice. You cannot close one trade twice, right? Would be nice. And then just spam profits all the time if you're in profits. But hey, that's besides the point. So banks close their orders here, which means this zone is gone. A zone is basically a one use only thing. Just like a balloon, water balloon. You're not gonna pick up a broken water balloon and use it again because it doesn't fucking work, right? Same with zones. Let's say we can actually make a nice little water balloon out of this. Let's make this shit blue. So this zone is full with water, right? We got a fish tank right here. And let's pretend market is a bolt that shoots. As you can see, we have a big move. It's a target. Bam. It's a bullet. What happens when we shoot a bullet at a fish tank? For the stupid people on us, it breaks, right? What happens? Water leaks out, right? Just like the banks. They break their trades, quote unquote. They close their trades and it's gone, right? It doesn't work anymore. If you shoot a tank, a water tank with a bullet, it breaks. You cannot put your fucking fish in it anymore. So it's a one-time use only. This zone is now mitigated. And what happens after a zone is mitigated? It disappears. And what does it leave behind? The mess, aka your liquidity. Let's see. You got your zone here, right? Make it gray. This zone is now mitigated. If we stretch it out, you can see the second time market is in this area, it shoots through. Why? Because this zone doesn't exist anymore. This zone stopped working at this area because this is where the banks closed their orders and continued going bearish. So this area where the bank sold is not valid anymore. One time use only. Let me type it out for you guys, because I know some ignorant fuck is gonna forget. One time. Holy fuck. One time use only. Right? You will not use the same toilet paper twice, right? That's kind of disgusting. Same with zones. You're not gonna use the same zone twice because it doesn't work. Because I want to find a pretty good example so you guys can understand. Okay, I got something right here. So, as you can see, we got market. We got a zone right here, right? This push causes low to break. But you may wonder, okay, but why did we take out this high instead of respect the zone and fall? Because as you can see, we still fell. There's a trick. If we zoom in, you can see that market went out of your zone. So we went below our zone, right? Because this is where our zone starts on the body, and we went below it. So this means banks push themselves out of the buy area or sell area, I mean. So now they're below their trades. What happens is market spikes back, which means banks did close X amount of orders, which means the zone's not gonna be respected anymore because it's now mitigated. And what happens when a zone is mitigated? It becomes liquidity. And that's why market did not respect your zone, because we shut up through it. So let me find another example for you guys, because I think you guys probably find this very interesting because no one tells you this. Do I see a pretty example? No. Yeah. So right here, we got our move, right? And even here already, as you can see, the market opens below or above the zone, which means banks got out of their area and already pushed back in. But let's say we give it to the benefit of the doubt. Market comes back here in the area. So that means this zone is mitigated. And then as you can see, this becomes liquidity. And you can see market comes back gently, grabs the liquidity, and shoots up. Shoot down again, right here. In your institutional zone, what do we get? A major reaction out of it. Then somewhere here, 5 minutes is more clear, but once again, market creates liquidity, comes back in your valid zone because it's not mitigated yet, just like this one. This is valid because nowhere did we shut the water tank, right? This is still clean. It's not been used yet, it's not been broken yet. We come back, and now you can see as well, even though this is news, but market comes back in that area and no way it's gonna respect it because it's already been used. Let's see if we can find another example for you guys. Right here. Perfect. I don't know why I drew this out, but sure. As you can see, we have your zone here. Market goes out, market comes back in. No idea. I think I used this to explain it to a student already. But as you can see, market totally ignored it and shut down, fell through. Same thing here. Another example for the other topic we talked about, just for to be quick for you guys. Right here. Never mind. I have no idea what the fuck this is. I'm sorry, guys. I have no idea what that was. Just some stupid drawing, I guess. Okay, one more example. This one. Right here. This is our major low. Cause this major push. Right? Market wants to come back in this area. This area is mid-range because there's not a big push out of it. So what does that mean? Market is gonna ignore this, see it as liquidity, grab it, comes back in your valid zone and shoot up. So guys, I hope it was clear for you guys. If you have any questions, you can always ask me, ask Sam, ask Jason, ask Rick, ask any VIP student because they all got the right knowledge. And then I'll see you guys in the next video.